listen-only mode.
Hey everybody, it's 9:30 Pacific time out here on the West Coast. Dr. K is with us right now. He just got back from the London Traders Expo where he presented on, what did you present on, Dr. K? Value investing or
Averaging down.
averaging down? Yeah, you were on techniques for averaging down. That's very good. How was the crowd? Good crowd.
Actually, I managed to combine all three concepts into one fast presentation, and the audience was quite sophisticated. So I talked about pocket pivots, Bible gap ups, and the market direction model all in one go. And at the end, there was still room for questions, and the questions were very intelligent. So I was very happy.
Okay, well that's good. That's good. Good to hear. Anyways, glad you could make it for today's presentation.
Just
Anyways,
barely.
everybody, we kind of hung out all week. It's Friday. I hope nobody's really jonesing. Uh, this would have been a good topic. Someone's asking the question, how to protect yourselves against an Apple flash crash. Wow, I haven't seen that movie yet. Is that some new horror flick, the Apple flash crash? Um, I'd say just buy puts and totally neutralize your position so you're insured not to lose any money or make any money no matter what happens. I think that would work if you're worried about that one. Anyways, let's talk about some
Actually, I would
stocks
add,
here.
I would add when a leading stock starts to falter, it gives lots of clues in the price volume action. So if Apple has some problems ahead, we're going to see it pop up in the price volume action. I don't mean just a little bit of a pullback. I mean something much more material that sparks a red flag in the pattern.
Yeah, and right now this is what Apple looks like, and the only rule we're using right now, and which you could use, is you only sell it if it violates the 10-day, and it hasn't. You've had closes below uh, the 10-day on the way up, and it has not actually violated. So, for example, I think this just barely closes below, but it never went below the intraday low here. So, I actually found support here off the 20-day moving average. You can see that. But in a sense, Apple is the NASDAQ right now, but there are also a lot of great technology names and smaller, newer merchandise type names that are doing really well right now. And we'll get to a couple of those. But you can make a lot of money in this market from my perspective based on the fact that you have stocks that are having 40, 50, 60, 70% moves. So if you're taking big positions, 30, 40, 50, or in my case, you go 100 or more percent in a position, and these things start jacking 20, 30%, you're making a lot of money. So this is a ripe environment, and despite the fact that anybody who's an expert on economic fundamentals can give you 5 million reasons why the world should incinerate itself tomorrow, it just isn't happening, and so the trend is still there. And another thing to consider here is with China slowing down and Europe, of course, as far as I'm concerned, just being a big radioactive, toxic economic wasteland right now, and with very little potential for growth given the way that the European system has so beautifully mired itself in tremendous amounts of debt. But I guess that's what happens when you try to provide everybody everything for free forever. So Greece being the first one to fall by the wayside.
Yeah, it's
But
a welfare state that you see in
pretty
these
much,
first
yeah.
world nations. That's why the U.S. and the U.K. and Europe are all debtor nations.
RINM.
Than Greece. But I think even right now the U.S. markets look better relative to the Asian markets, which have been on a tear. I'm probably correcting here. China's been coming up. But the other thing is with China seeing slower growth, and of course that was a headline I think yesterday and or last night, and the night before, that knocked down the Asian markets. You still have the potential for the Chinese to come in and start easing again, and so that would be another catalyst. But I do think that you're seeing a relative flow, and you have seen a relative flow of money into the U.S. markets and into U.S. stocks, and some of the best stocks. I don't care whether you like Asia or Europe or whatever. There is no other company on the planet that matches Apple, just in sheer entrepreneurial and innovative wherewithal. There's nothing like it. So that's why it continues to act well. That's why our market continues to act well. And even on this pullback, which strikes me as nothing more than a somewhat rotational pullback, because you have seen some of the big Dow stocks, the cyclicals, the industrials, they've gotten smacked around. But I did point out something on this. Like, let's take Caterpillar for instance. You've got this big formation. It looks like a pod. It has that punch bowl of death type of look. So really what you have is something that's come straight up off the bottom here. To expect that it's going to launch out of here, especially on this little wedging formation here, is kind of unrealistic. So I think it could go sideways. But I think what you're seeing right now is some cover is being provided to institutions looking to buy say, more growth-oriented stocks, more in technology, and that's what you're seeing. I mean, you even got a name like Cisco over here, flashing a pocket pivot the other day on this little break, and it just pulls in very nicely. And so you're seeing some of this rotation. You're seeing some rotation out of these names, the cyclicals, the stuff stocks. You know, CMI is another one that's been coming off. There are several others. I think Joy Global is the one that's just been getting slaughtered, and so that kind of set the stage, I suppose. And you have some big oils also coming off the last few days. And oh, 1 second here. Just have a little issue with my power plug. My laptop over here, but it looks okay now. Anyways, where else? So I think what you're seeing here is a little rotation, and so what that does is cause a little bit of, say, uneasiness in the indexes. But really, you know, when you come in like a day like today or yesterday, and I'm watching my leading positions or the stocks that we own and I own. Yesterday the market's coming down, but it's almost like the market's holding a watch in front of you and swinging it in front of your eyes and telling you, you will sell your shares. You will sell your shares at the bottom. You will sell your shares at the lows of today, and it's trying to do that. And I think the market's just trying to shake you out of your positions in some of these better acting stocks. So let's get down to brass tacks and talk about some of these better acting stocks. First, you know, LinkedIn finally came out and gapped up. So everything in here was relatively constructive. This is a little funky as it was starting to break down here. Always a potential for it to test a 50-day moving average. It did not do that. And you know, we get emails from people, and then the other thing is if we're running a very heavy long position in LinkedIn, say 30-40% long, if I'm in 150% and I'm buying it on the basis of this move here and this move there, and it starts to falter, we'll definitely trim down to a core position and try to hang out with that. And I think once you get this gap up, now you've cleared this 95 resistance, and you're kind of cleared for takeoff. So I would think that if you're really going to get a move here on LinkedIn, this is where it's going to start. There was a flash crash in Apple today where it was halted. I didn't see it. Somebody's mentioning that, Dutch K. Did you hear anything about that?
A flash crash in Apple? I haven't heard a thing.
No, I don't even see it on the daily.
Let's see any news on it.
So I have no idea what. Maybe you guys were using. I don't know. I don't see it. It doesn't show up here. I think it was an error. So it's probably just an error trade. But 10-minute chart. And somebody's saying, look at a 10-minute chart.
Oh yeah, there was a circuit breaker triggered. Volatility circuit breaker was triggered.
Well, it came off the 610 level. It was making and then it broke. Is that what they're talking about? Because I don't really see anything that I would call a flash crash. This is a 10-minute chart. That's occurring in like 20, 30, 40 minutes. It looks like.
I see. There was a trade at $542.80. So it sounds like it was some kind of fluke trade that's not even appearing on the.
Yeah, it doesn't look like much to me. But you know, how can you protect yourself against that? There's really no way. It's almost naive to ask that question. So no soup for you on that one. How do you protect? It's like, how do you protect yourself against a oh well, like I don't know, maybe a year or so ago, there was a couple out on the beach here where the planes take off from LAX and they come out over the ocean. They're sitting there, and the engine off of a DC-10 comes down and hits them, or hits very close to them on the beach. You know, it's kind of like asking, how do you prevent something like that?
Yeah, how do you prevent a meteor from hitting you in the head?
Yeah, exactly. And so, you know, it all becomes a matter of you don't invest in the stock market if you can't handle the risk. So if you're going to be in the kitchen, there will be some heat from time to time, and if you can't take it, the market will just take your shares away. So anyways, Apple looks fine to me. I don't see any problem with it. Market looks fine, holding in tight. They're just trying to take your shares. LinkedIn, getting back to LinkedIn, you know, Bible gap up. You're using the low here. It wouldn't surprise me if for some reason it flipped out and filled the gap. Give it a little porosity, I think. The one thing you might have, and we'll just see how long this lasts, maybe a little overhead from here, but I'm going to guess a lot of this is out of the way. Dr. K, what would you say? Do you think any of the overhead from that pattern on the left side is out of the way at this point?
You know, it's going to be possibly a minor bit of overhead. But I think that the gap up, LinkedIn's had 2 viable gap ups now, and I think those are going to outweigh any kind of minor overhead from back in July.
So yeah, so we'll see how that goes. Some people are saying the screen is frozen, but does everything look okay to you, Dr. K?
I'm seeing it okay. Yeah.
Yeah, so it could be your
It
system
could be
too.
if your internet's running into some headwind. That usually causes static screen syndrome.
Yeah, and that can come on either end, can it? I don't. I think we're pretty fast here. We're running a commercial line, so I don't know. But in any
I'm seeing
case,
you
you can
fine.
see.
I have a fast line here, and
Okay.
I'm seeing you fine. So.
Okay. To me, all systems are go on LinkedIn. They've got to work through this overhead. That's not that much. So I'm expecting with people short the stock and everybody still loving this to short it, it's fine. So don't really care for the action in Zynga. That's kind of lame if you ask me. But yeah, they're coming out. I saw the headline, 49.2 million shares. That's a lot of stock. The CEO is selling some 16 million shares. So there's a lot of stock going to come on. But notice how it does
Is it that
hold.
many shares, or is it the dollar amount? It is that many
No,
shares.
it's that's the number of shares, and the insiders are selling a fair bit. The CEO is selling 16 million shares. So uh,
Yeah, actually, that makes
you know,
sense because there's so many
they got to
shares
get through
out
the
there.
secondary, and then you see what happens. But we just bailed. It's like it looked good yesterday on the pocket pivot. It looked like it was going to try and come out here, but it may come in. One thing though, on the weekly chart, it does seem to hold along at the mid 12s to 13 area, and it's pretty tight on the closing basis on 4 of these weeks here. So maybe it needs more time. You remember this thing had a nice move up out of here, and it's been consolidating that, and now you're coming down to the 10-week moving average. So this might be a situation where they finish the secondary offering, and then it comes off the 10-week. But you know what? At this point, we're just going to leave it alone and let it do that first, because there are much better things to be playing, LinkedIn being one of them if you want to play in the social networking space. And then, of course, you see InventSense today, launching here. It's on track right now. We'll see. Let's see what's the rate right now. It is on track roughly to try and take out this day here on the downside volume. If it does, that would be a pocket pivot off the 10-day moving average, and so this looks pretty good. I still think this is quite an exceptional story. I think this stock is a $40 stock or higher. That's just what I think. That's my call, and I think it's our biggest position right now, along with LinkedIn. And so it's working really well, and today is a beautiful day. I've noticed when it tries to come off during the day, when I'm looking to add shares, I set an alert, below the market. If it comes down in there, I'll buy it. And so yesterday, you see it dip below 20 a couple times going into the close. You can just pick off some shares there, and by the close, I got it back above 2020. And this morning, the same thing happens. But I think this thing is under major accumulation. I think this thing could move faster than you think. And today might be a day where we come out here on a pocket pivot. We'll see. That said, it could continue to go sideways for a period of time. But I think this is the play that we've been talking about in terms of capitalizing on the build-out of motion sensor and motion detecting technology on smartphones and tablets and PCs, laptops, whatnot. And so I think that they'll benefit from this in the same way that Omnivision Technologies benefited. Omnivision, as you guys all know, in the early 2000s made the chips for smartphone cameras, laptop cameras, and of course back then those were like extras you could get on certain phones, but today it's pretty much ubiquitous and standard equipment. So I do think you'll see a movement in motion detection and motion sensing where that becomes standard equipment. But there's another spin on it all, and that is the movement from 3-axis to 6-axis and 9-axis motion sensing. And there's just a lot of different ways that they can process your movement or the movement of the device into usable information. And I've heard that some of it allows you they can tell what direction you're walking in if you have a smartphone, and they can see and tell you if there's something ahead of you and all that, so that they can send you a coupon or some little ad or something that induces you to stop at the store coming up down the street as you walk down the street. So I think they're in position to capitalize on that. And I think that's why this stock is acting as well as it is. I mean, this is straight off the 50-day moving average, the 10-week moving average on the weekly chart, and it comes straight up. Here's the weekly chart here, and whoops. And you're just coming out, and you're holding very tight. Volume is very heavy. What I think is interesting here is that despite they don't, for some reason on eSignal they don't show you the volume on the first week of trading. I don't know why, but that's just some weird quirk. But it is still down around here, around this level. So these 2 weeks, the last 2 weeks before this week, were 2 of the biggest upside volume weeks in the whole pattern. So this thing is pretty powerful, and there's a lot of buying here. So I think there is some realization by institutional investors that this is a stock with a lot of potential, and a lot of potential to go higher. So going through some of the other stocks, let's just go through some of the things that we like. Biogen continues to act very well. It's just very tight. It's going to bore you to death before it breaks out, I think. The powerhouse, though, among the biotechs has really been Alexion Pharmaceuticals. My son Alex favors that, and it's one of the reasons we own it. But I should have bought it when he told me to buy it. In any case, that's acting well in a series of pocket pivots on the way up. And it's getting a little bit, extended here, but it could continue just to go higher. So far, a little sloppy, a little porous around the 10-day moving average. So, Dr. K, what would you use as your selling guide on Alexion?
Well, let's see here. I mean, it looks to me like it did make a 10-day violation on March 7th.
Right here.
Yeah, I mean, it's a very tight pattern, and I would still say using the 50-day as your guide is probably the best route, unless it can respect the 10-day force for more than 7 weeks.
Yeah, the other thing I'm wondering here, you can see the green 20-day moving average here. It actually tends to obey the 20-day moving average fairly well, and it's very rare that you'll see a stock do that, but it happens on occasion. I just noticed that is what's happening here. I wonder if that's going to continue to be the case. SLV back in
actually, also if you go back into looks like July 2010, and what it does is it tends to obey the 50-day all the way up through April.
Yeah, but look at this. Look at this where it holds the 20-day here. It's holding the 20-day all the way up, and it actually never it violates the 10-day many times, but it never violates the 20-day. So it did that on the last leg up. Then it forms this new base, and it seems to be doing it again. I'd almost say this is one of those rare cases where it could be like the SLV was in 2010, 2011, where it could obey the 20-day. That happens on occasion, right?
Yeah, it can. Yeah,
very
sure.
Rare,
I mean,
though.
It doesn't make a pattern. Yeah, if you go back to 2010 to 2011, it looks like it looks like it was able to hold above the 50-day fairly well. So maybe that's another.
Yeah, it does that. It tends to do that. Yeah, I think though what I would do if I own the stock, given that it's extended, I would probably give it room down to the 50-day, especially if you bought it closer down on the breakout. But it's acting pretty well. So another biotech that we like is Salix. It's a little slower. It's broken out here, and it's holding the breakout. Big volume on the convertible bond offering last week. And holding up okay. It's meeting up with the 10 days, so watch for a pocket pivot perhaps coming off of the 10-day moving average. So everybody's asking about GNC. Not much to think. You have a Bible gap up, and it continues to hold the Bible gap up with the 10-day moving average catching up. And I think this is the case with almost all stocks that are acting well if you own them, and the 10-day moving average is starting to catch up to the stock, kind of like we're seeing in INVN or InventSense today. You got to start watching for a possible pocket pivot. And so what you want to be doing is when you have your list of stocks, we use eSignal, and we put volume alerts on our positions that we're watching and which are near either the 10-day or the 50-day moving average, or otherwise in a position where they could exhibit pocket pivot type action. And so we'll get a volume alert when that happens. And that's what you can do with your positions, just set a volume alert and just wait for that to go off. You know, we tend to think that you don't have to sit there staring at them. You can set alerts, and they'll go off when you need them to. But GNC so far holding the gap up, it acts very well. It's kind of a cousin stock. Well, not kind of a cousin stock. It is a cousin stock to Herbalife. And no, that's not a medical marijuana outlet, but this one is. And look at what a move there. I'm surprised nobody emailed us on this. Medical Marijuana Inc. I love it. What do you say, Dr. K? Should we buy it or smoke it? That's what I want to know.
That's a pattern, all right.
I love that flag. I mean, I'm all over that thing. Look, is this a no? It's not a pocket pivot. This is a massive pocket pivot right here. Look at that. So I actually know somebody who bought it. They bought it at 3 cents, watched it go to 10 cents, and the guy's IMing me, and I had to actually shut him off because he was going nuts. A friend of mine, actually. And I told him you should probably dump it there. How often do you get a triple in 2 days? Not very often.
You could have easily bought a million shares of this thing.
Anyways, a little levity there, but Herbalife or Herbalife, whatever you want to call it, that's another vitamin company, and GNC. I guess these guys live off of sports-type nutrition, so... Do they have any gluten-free products? I don't know. I have to check it out. But in any case, that one's
yeah, they will. Well. GNC will definitely have gluten-free.
Gotta love it, yeah. So, anyways, Solar Winds, little pocket pivot here, breakout, pulling back. You buy it. I think you buy it. So, Let's see, what are the stocks looking at? Oh, got this stock. Okay, well, yesterday we had a pocket pivot. You know, I got to tell you that I have to buy this stock. I have to own some shares of stock no matter what. And there's only one reason, or one main reason, why you have to own shares in this stock, because there's a connection here, and you know. Anyways, that's why you got to own it. So the Wango Tango stock, and it's doing the Wango Tango yesterday and today, holding up. So continuing with the Wango Tango maneuver. And you know what I find really puzzling about this stock is these guys have an 8 million share secondary offering coming out, and the thing's going up on big volume. What gives? Is there some news? Does anybody know anything out there? Is this thing, have they priced it? Because it's very rare that you see something launch on close to 1.5 million shares when it trades something like 400 or 500 a day. Well, actually 395,000 right here on the moving average, but I don't know why that's moving. Dr. You didn't hear anything on that, did you?
No, I mean, it's impressive action given the news. And of course, the price volume action is very constructive on this IPO. So, yeah, I mean, this is definitely one I'm invested in.
I have to admit, it's the first time I ever bought a stock on the basis of its connection to a Ted Nugent song that happens to be one of my favorite songs. But it's working. And surprisingly so, but I like the pattern, and you know, here's a base here. The one thing about this thing to keep in mind is, you notice something. I think this is a really great example of how something tightens up. You know, and you can see this on this weekly chart. It's a little bit exaggerated, being an E-signal chart. I can make it less so. How's that? A little tighter there. But you can see it comes public, and really just for a few weeks it comes off. And I think that's what the market got hit last August. And then you can see the ranges here are kind of wide, and you notice the ranges start to loosen or tighten up rather, and they lose this sort of loose look, and now they get really tight in here, and then boom, you're breaking out. Now this is also as tight as this and very constructive along the 18 area, very tight, and you're seeing the stock come up. You got a pocket pivot. I think it's probably going to new highs, but it acts pretty well, and like I said, I'm sure Dave Eccles is out there. He probably owns it too, being a Ted Nugent fan, but it acts well, and you really can't complain. So. Some other stocks. Let's see. Let's go through some. I mean, that's kind of what we like the most. I like InventSense. I think is probably one of our top plays, and LinkedIn. And we think those are definitely two big stocks that you should have a position in if you don't already. LinkedIn is still in position. InventSense getting a little bit extended if you're not in it already, but I guess you could say this is an entry point here if this pocket pivot holds up. So far, it looks like it's trying to. We'll see how it closes. I got my alert set, and we'll send out an alert. If it does hit, so watch for that. But you know, I think this is active here. I'll see what happens here. Could you enter it here? You could. I mean, there's always potential for it to pull back and do something strange. I think, especially if it's a stock that institutions want to accumulate, because a lot of times something runs up, market makers or a big institution will come in and just, if they have a chance to hammer it back down in order to start to pick up shares as sellers sort of panic. So. You know, that could happen, but I sense that that doesn't want to happen. And so far, it's tried to come below 20 several times on an intraday basis. You can see it over the last several days. Doesn't want to happen. So, you know, I think that's definitely, hopefully, people already own it. And remember, we were onto it here. So, let's see. Let's go through some questions. Okay, they're saying Apple was halted. It's a fat finger trade, so... I think that's the problem with electronic trading. One of the faults on that. So, BAT system, 540 on BATs. Man, don't you wish you could have bought that? Okay, I see all the everybody IMing us. All right, thanks everyone. See, we're always assured of having the inside scoop with everybody there ready to IM us and let us know what's happening. Would you dump Apple here and go into INBN? I don't know. That's I mean, I would. I already dumped Apple a while ago, so I missed the last 10%. But whatever. I'd rather have the last 10% more that looks like it's coming in InventSense. I think if it's a matter of force feeding. So I don't know. What was the dollar amount on your loss in Zynga? In terms of what? It was 6-7%. We don't let it get past that, so that's the percentage loss. We're not going to tell you what the dollar loss is. It's none of your business. It was bazillions and bazillions of dollars. How's that? Let's look at something people ask for about this. And remember, we talked about this. I think I showed it to you guys somewhere in here. But this is a pretty erratic stock. Ubiquity. I guess these guys provide internet service to rural areas, and they don't really market. They rely on word of mouth. That's worked pretty well for them. Stock's just very choppy. So, you know, I guess you could say here's a breakout on a pocket pivot sort of volume move, it looks like. But to me, you know, I'd rather play something like this, which I think acts a little more coherently. Similar sort of play. I mean, that's a wireless play on internet service being offered in rural areas. Tango is a play on the management, the need for companies to manage what they refer to now as their communications assets, which is everything from their networks to the smartphones that they issue to their employees and the networks that they operate on, and so on. And so, you know, I think I'd go with something that acts a little better. The stock is going higher. Ubiquity is going higher, but it's kind of weird. If you own it, you know, you're okay because it's at new highs right now. So, and if you can sit through that, I guess, you know, you can make money. But it's pretty jagged, so I'd like to see it tighten out. Let's see, more questions here. Do you think FIO is a cup with handle potential? FIO's probably needs more time. It's really low in its pattern, you know, down here. It's acting okay, and I think it's entitled to this pullback down to the 10-week moving average in here. So it looks okay, but it may take some time to set up. You know, it kind of reminds me, I think of Tibco. You know, when it was down in here, it was real tight, and it's come up, and it just marched higher every week over the last few weeks, and it's going higher. That's social networking for businesses. For those of you familiar with that, we've talked about it many times before. And Tibco on the way up, flash pocket pivots as it comes up. And it's had its moments, you know, flipping out here. FIO does the same thing, but I think FIO needs more time. Dr. K, any comment on something like that?
FIO is it's been a little bit erratic, and I don't like the pattern in general. And it's you know, it's a weaker pattern because it's not near new highs in this kind of market environment, which has been uptrending. It's also got two gap downs in the pattern. Yeah, I like the story. The story is very compelling, but the problem is the pattern.
Yeah. Here's a question. Is there a reason why you shy away from high dollar stocks like ISRG, Apple, Priceline, Google? That's actually not true. I mean, I have had Apple on this move, so I don't. If I think something's going to move, I'll buy it. But I would say that I tend to favor, or I think we tend to favor, newer merchandise. So I mean, despite the nice move that Apple's had, if you're buying INVN here, it's a double. So Apple, during the same period, has gone from let's see, 400 to 595. So not as big a move percentage-wise, and probably because newer merchandise tends to move faster. Although Apple is nice to have too, but I think there was a time to switch, or actually have them both in your portfolio, and you know, you could do that. Priceline is another one that acts well on the Bible gap up. So, but it's like, you know, it breaks out here. It's like a $55, $58 stock going to 66. That's nice, but it's still not as anywhere close. Or I'm sorry, $58 stock going to 71. That's at 12, 13 points. You know, 25%. That's nice, but I'd rather own Invensense.
I think what's also key is that every investor needs to know what their risk tolerance is, and some of them are not going to like playing very volatile stocks like some of these IPOs. And in that case, I mean, a stock like Apple or Priceline is really quite ideal because the volatility is a whole lot less, and you get a lot of upward momentum.
Yeah, and you know, Intuitive Surgical is another one. So, but you know, percentage-wise, they're just not as hot. And we find that the biggest money is usually made in the newer merchandise when you're starting a new bull leg. So, you know, I tend to go for stuff like that, higher octane. So. But not that you can't make money. If you're the type of person who prefers things that are slower and steadier and big cap quality names that are institutional favorites, then they'll tend to be more stable, I think, but they also move slower. So that's kind of the trade-off, I think. Although there is, you know, there's a time to be buying Apple because that's a great move. And, you know, I bought on this move, selling into this move, and then buying back, selling this move, buying back, and then not dealing with this move at all and staying out. But that's a nice move to catch. And I think it needs base, but you know, I'd much rather prefer to be big on this one from here, and you know, selling into here and then buying back in here. It's all been beautiful, so can't really complain. Tango had a positive mention on CNBC yesterday. Is that what pushed it? Boy, that's kind of crazy that it's able to do it, but it's holding. You know, sitting here at $19 right now as I speak. But you know, this is just I don't know. I want to play that Ted Nugent song again. Are you guys? Is everybody gonna get mad at me if I do that? Probably. As long as I don't play the Burl Ives Silver and Gold song, right, Dr. K?
Yes, please spare us.
He hates that one. I like that song. I think it's a classic song, so it gives me a warm feeling. Anyways, let's see. Okay. NetEase. Let's look at NetEase. NetEase looking good, you know. Can't complain about that. It's a squirrely stock, thinner internet stock, and coming out of this big cup-like thing that's kind of ugly. Maybe like Baidu, you know, Baidu's coming out. And I know everybody emails us, you know, this pocket pivot on Baidu, but it's a 71 relative strength, so our thinking is, yeah, if you want to buy it, go ahead, but we're not going to put a report on it because it's really not our favorite. We do try and cull out what we think are the better ones. We're not always successful in that endeavor, but that's what we try to do, so we don't mention everything. So I know everybody wants to email us on everything when it's happening, but you know, we've got all the systems we need to tell us everything that's going on in the market and then some. So I'm watching INVN 2157. I don't know. Should we buy more, Dr. K? I don't know. We're already up to our eyeballs in it, a little past our eyeballs. I think this thing is coming out the top of my head now. Kors, Michael Kors, a big move and going sideways now, building a base, 1-2 weeks in a base. So maybe it needs to build a base, and hopefully this secondary. Did they price the secondary yet? Has that been priced? Anybody know?
I think they did, actually.
So if they priced, yeah, that's what this is all about. Yeah, I hope so. But see, I was thinking Tango yesterday had priced their secondary, okay, and they didn't. So I wasn't really sure on this one, but I guess they did. Okay, I should probably check my news. But actually, I haven't been at my desk most morning. I went out for a run just before the webinar, so I'm not really sitting here looking at my screen. I saw AdvanSense drop below 20 earlier, picked up some more shares, and then went running. Come back, and it's above 21. That's how you need to invest that way you just stick to your game plan. So, you know, hopefully this absorbs. You're not seeing some big pop on this, but it's absorbing the new supply just fine. But that's a big move, and it needs to build the base. So maybe a flag here. Just keep your eyes on it. You know, I think it's acting fine. You did have a violation of the 10 days, so, you know, theoretically, on the violation, you could have sold, and yeah, it can go back up, but you're just waiting for it to start the next leg up. And, you know, if you got in here and added on these pocket pivots, then you catch most of this move, and this gap up, too, also held. So there were a lot of buy points on the way up, and then once it violated here, you would have taken a very nice profit, and they just hang back and leave the other, you know, 5-10% for Bernard Baruch and his friends. You know who Bernard Baruch was. He said that one of the reasons he made money in the market is because he always sold too soon. Leave the 10% for everybody else, take the fat, the big fatty part, the rump roast, as it were, and move along. And come back to this when it sets up again. So, you know. Also, I don't want anybody ever to email us asking us if we're concerned about a stock when it's down on the day. I only want you to email us if a stock is up and ask us if we're concerned when it's up. I always notice that everybody's concerned when stocks go up, and then when they're down, they want to get concerned. But, you know, stocks have to come pull off every once in a while, and that's kind of normal. So it's really not anything to get concerned about. So from now on, we want you to only be concerned when your stocks go up, and when your stocks go down, you just do a double check on your stops. You do a double check on the action of the stock itself in terms of the trading volume and where it is in the position of its daily chart, and you operate on that basis, okay? Leave the concern for when they go up, and you actually find that things work a lot better that way. So somebody asking me what my opinion of JVA is. I saw this thing setting up in here, and I saw this move this morning. I should have bought 100,000 shares right there, but I didn't because I don't trust a name like this coming off the bottom. But it's coming around. So, you know, if you want to try and trade this type of move, you had to be here. Today, what are you doing? You getting a pocket pivot? I don't know. I'm not a buyer of this one. It's too low in its pattern. You got some overhead here, so maybe it takes some time. But why buy this low in its pattern? And it's interesting that people are more attracted to something like that. They would rather buy this because they think it's cheap than this, which is making new highs. And yet you'll find that these go higher because I notice a lot of people want to favor Biogen because it's hanging out in space, and it looks good, and we own a little bit of it, but just a little bit of it, waiting for it to take off at some point. But they don't want to buy that. They'll buy that at 120 because it's hanging out there and it hasn't had a big move yet, but of course it still doesn't go anywhere. Meanwhile, they won't buy Lexion at 78 up here because it's too far up. Okay, so you got to get that one out of your head too. In terms of as we're writing this new book and talking about developing your chart eye. And one thing is learn to love uptrends. Learn to look at a trend as something that is representing a body in motion and not necessarily something that has gone to an extreme high and now it needs to revert to the mean. Lose this whole reversion to the mean mentality that's very much ingrained in, I would say, any of us who ever took a course in statistics in college, because you want to think in terms of that. And of course, there's so much of it that we're surrounded with day in and day out. The sun reverts to the mean every day. It comes up and then it goes back down and reverts to the mean, which is nighttime. And so we see these cyclical things and things that go one way and then come back the other way. But once a stock is a different animal, and I think this is why a lot of things that, or a lot of the ways that humans tend to look at the world and look at things in general, particularly those of us who are encumbered by a large degree of academia in our backgrounds, namely college degrees at top schools and such, you can get bogged down in a lot of this sort of noisy stuff. Here comes InventSense heading for 22. Keep going, baby. We love you. But, I think you got to think about this and think about how you think about stocks. So everybody wants to get into Java. Oh, boy, look at it. It's starting to move, and it's down here low, so it's cheap. One day, so it may get back to its $30 peak. But there's a lot of overhead on the way up. This guy has no
actually,
overhead.
if you look at the weekly on Java, on JVA, I think there's a tendency that people will look at what it did several months ago, where it rocketed from 5 to 30, and so they think it's going to repeat that same pattern, and that almost never happens. The odds are extremely against that pattern repeating and the stock going to even $20 a share from current levels. I mean, what usually happens with this kind of pattern is, now we've seen 2 excellent days a few days ago where the stock was propelled about, 60% in 2 days.
Yeah.
And so the thinking is, okay, now it's got momentum, it's going to start really moving higher. Well, that's the wrong way to look at it. You should look at it as it's already made its move back in March through June of last year. That's when you should have been on board this stock if you were going to trade a lower price stock. It did have a great move, but for it to replicate that, the odds are very much against you, and you're better off looking at fresh stocks that are hitting new highs, like InventSense and a number of other names in this market.
Right, and I would say it's just, you can see this bias, and I see it. People look at Biogen, they would rather buy this right now, okay, or even buy this here at 119 because it's not up so much, Whereas they'll look at Alexion, 5 weeks ago was here down around 82. Now it's 10 points higher, 10% higher, 11% higher, 12%, something like that. So, start to train your eye to love trends, and you want to go after things that are trending, not things that you think are cheap. So thanks for asking that question on JVA. I think helps us illustrate something and how people get obsessed with this now. Of course, here's another one on Netflix. ARF. I'm not a buyer. So again, you got a lot of overhead to work through. Not interested, and it's the same sort of mentality. Cepheid is a little disappointing, getting back to some biotechs. It is holding the 10-week moving average on this pullback. So what you get here is this pocket pivot right here, and you get some pocket pivot type action, I think. No, this is it right here. And then it kind of dips down, tests the 10-week or the 50-day, and roughly trying to hold this gap up, but it's just going sideways now. So I think what you have here is you have a situation where stock comes straight up off the bottom, and it needs more time. Now the thing is, you think that maybe, and we actually bought a little bit of this, but we dumped it immediately when it doesn't hold the 10-day moving average, because it probably needs more time to set up, and that's the case. And sometimes stock will tell you, you'll get a little signal like this, and when you think about this in hindsight, this volume here, despite the fact that it is the highest volume, higher than any down volume over the prior 10 days, it's really not that big. And in terms of the overall pattern and the balance of buying and selling in this whole sideways movement, it's not anything that you might consider a spark that will ignite a sharper rally. So you probably wanted to see more volume, maybe at least above average volume in that case. So it might have been premature, but we'll always look at a pocket pivot as being a subtle buy signal. Take a small position if it doesn't work right away, or rather sooner it starts to falter, just blow it out and wait for it to set up again. And I think that's the case with this. Fran, everybody loves Fran. Francesca. Well, Bible gap up. We're looking for a pullback, and not much else to say there. So, this is kind of extended now. I can't buy it, but it's holding the Bible gap up. Do Do you guys ever like anything enough to leverage up with options or in general? I don't really trade options. I have used it when I run out of money to add to a position. There's, if you read our book, Trade Like an O'Neill Disciple, I talk about, I don't know what chapter it is, 3 or 4, but I talk about C-Cube Microsystems and how it had the first pullback to the 50-day moving average. And I loaded up on, it was, I think, October when it did that, and I loaded up on the November 50 calls. Stock hit 94.95 by the time those options expired. So yeah, we've used them, but it's just like I'm buying the stock. If I'm at a point where I want to add to the stock a leading stock that I have, and I don't have any money left, or I have a little bit of money, one way to go for nice additional exposure, if you can handle the risk and it's at a good spot to do it, and you got a big profit in it already, is simply to buy options in lieu of the stock. So you can do that. Let's see. Everybody's asking about cores. We talked about. Would I do the same if I need it? I bought the calls, like I said. Somebody actually asked a question, so I just got to that. Interesting. Yeah, and I did it, like I said, I did it because I ran out of money, and I had like 15,000 left or 20,000 left in my account. It's almost out, and I bought 150 November 50 calls at $1.50, I believe it was. So. Yeah, Coors is absorbing. Somebody observes that Coors is absorbing the additional stock today. So let's see. Somebody asked him. Monster. It's holding fine. So we have a position here. We don't see any issue with it. It's acting fine, holding the 10-day. You might look for a secondary continuation pocket pivot there. Let's see, other stocks. Everybody's asking about Coors. I don't know. It makes me think of beer. Volta continues to act well, so nothing there. Pocket pivot. This is a pocket pivot off the 10-day moving average. I guess so. A little tiny bit extended, but not that much. That's all. I think this just continues going higher. Let's see. Somebody asked about this side. I don't ever see this one. Is that what it is, Rolf? Or is it... Gotta go back up and see if I can find this. ROFL, sorry. It's my left-hander's dyslexia. Is that right? I don't see it. Am I getting this right, or am I wrong?
I don't think it's neither of those tickers are valid.
Maybe they were giving one of those, like OMG type things.
Oh, it's rolling on the floor laughing. OR. That's what I thought. I was like, there's a ticker symbol that represents rolling on the floor laughing. I didn't know that.
Guys, all right, no, none of this abbreviated language, because it looks like a symbol to me. You'll have me going nuts over here trying to bring this up. That's pretty funny. My view on gold and silver. Well, I don't like paper gold or paper silver. So, interestingly, I think what you see in the movement in gold and silver is mostly trading in paper markets, because I had lunch with a friend yesterday who's trying to buy $1 million worth of physical gold. He's having a hard time finding it. So it's not like there's a lot of physical out there. I think there's a lot of synthetic gold out there, and that's really what affects the price movements. I bought physical gold, a pretty good chunk of it, back in 2000, and added, I think, in 2008 as it was coming up through 700 or 800, I think. But that I'll only, for a long-term investment, I'll buy physical gold. And I think if you see gold coming down below 1,500, I think you could buy some physical if you're looking to diversify away from paper currencies. But I think the trade right now is out of gold and silver by a long shot. They could be finding a bottom. I notice there's some people sending out emails and comments out there that it's all gold and silver are going to go back to becoming paperweights. I thought that was kind of interesting, because back in 2000 when I first bought gold at around 280 up to 300, 320, I had a 10-ounce gold bar that I kept on my desk at O'Neill that I used as a paperweight. And the interesting thing is that I was able to keep it on my desk, and the janitors would come in at night and clean the offices, and people would be in and out of my office. I'd leave the door open, go to meetings and whatnot. It stayed there on my desk the whole time, doing what it did best at the time, which was be a paperweight. And nobody ever took it, because nobody thought it was real. And finally someone commented to me that was really cool, the little tchotchke paperweight I had, that the gold-plated lead bar. Yeah. But is gold going to return to being a paperweight? Well, I would say right now it's $1,600 plus an ounce. It's not. Maybe it's a bottom. I think if you tested this low, that might be a spot where you're at a low. But people are starting to hate it again. I don't necessarily believe that it's all over with and that gold and silver are going to become worthless. So what's your take, Dr. K, on these two precious metals?
Really comes down to quantitative easing and how much of that's going to be in force coming out of Euroland, the UK, and the US. And so far, there's no indication that QE is going to go away anytime soon. You know, Europeans are printing money. A lot of central banks are printing money in various forms. So I think you know, we don't have the Fed in earnest launching QE3 as of yet. And I think in the meantime, gold and silver are probably going to continue to form long basing patterns. And then once the Fed comes to bat with QE3, I think that'll be potentially a great base breakout for both gold and silver. And the nice thing about GLD is if you look at the long-term pattern, it tends to love to form these sideways consolidations that are very constructive, so that on breakout day or on pocket pivot day, it's incredibly obvious.
Yeah. We'll get to some more symbols here. People are asking, would I consider this a pod? I don't know. Right now, I consider it a pretty strong uptrend. This is a nice big move, and I don't think you short any of these patterns. I don't really see this as a pod necessarily. It could just turn out to be a big base and it goes tight. So I'm not going to short into any of these moves. Number one, you need to be in a bear market. You're not. Okay, you're in an uptrend, so I want to be long, and I don't need to mess around with the short side. Well, I can be long things like InventSense or any other number of leaders. So, you know, this isn't even showing any signs of topping. It acts very well. It continues to hold up, holding along the 10-day moving average. So there's really nothing to do. I wouldn't even look at it as a pod. In fact, right now on my list of short sale candidates, I have 3 stocks, and I'm not even sure if 2 of those are even worth keeping on there. RAX, everybody asks about RAX. I hate RAX, but, you know, it goes higher, and I hate it because you had this nice gap up and it kind of flipped out. Shook me out of my position here, but that's fine. Lose a little bit of money, kiss it off. But of course, it turns around and goes to new highs, and looks okay. This was not quite a pocket pivot here. You see, the thing here is you could have considered this a pocket pivot, but you know, now you're getting into this relativism that's maybe not as precise. But the reason is here's a shakeout day, and it closes at the peak of the day. It's still down on a gap, but the volume here, you know, do you count this as a supporting type of day or as a selling type of day? You know, it's somewhere in between, and you may say it leans more towards support. It fills a gap here, and it gets support. So maybe that isn't a down volume day. It's more an accumulation day. You don't really know for sure. So in a sense, maybe this was a pocket pivot. You know, but now you're back to the 10-day. It's still very erratic. So it's still acting fine. If you sat through this, you know, if you were in here earlier, and actually know somebody was buying it in the base on the basis of some of these pocket pivots here. So they still have a good position and able to sit through this. You know, you can still hold it. It's fine. But you know, we tried to get out on that gap up, and it just kind of gave us headaches. SourceFire continues to hold the gap up here. What you're looking for now is some sort of a pocket pivot coming up off the 10-day moving average. But you couldn't get it here because you only had 1, 2, 3, 4, 5, 6, 7, 8 days from this day, this down day down here. And so you want to see, you're now cleared for takeoff if you get a higher volume day than this day right here. So that's what I would be watching for on fire. CLR gets a little you know, pull back down to the 10-week. Now, we've talked about oils again and how erratic the trends are, and you can see that Continental Resources, which is going to benefit from the movement towards more fracking, assuming things don't get all fracked up, but it comes out and tests the 50-day moving average, but look at how it goes. You know, nice sharp move, gets you all excited, and then pulls back just in. Finally, another sharp move, pulls back just in. And here's a nice big sharp move, and it just kind of fizzles the whole thing away as it comes down to the 10-week moving average. So what's the moral of the story here? If you want to buy one of these things, one of these oil stocks, even the best oil companies among the smaller ones that have the growth potential, the bigger growth potential, and are leveraged to the whole fracking thing, then you buy them off of the moving average, I think. And yesterday, or a couple days ago, you had a pocket pivot off of the 50-day moving average. So it's viable on that basis here, using a violation of the 50-day as your downside guide. Pretty simple. Jive. I mean, it's a really thin stock. It acts pretty well. So what is there to say? It holds a 10-day moving average. Looks like you get a pocket pivot right here. So that's basically what you're looking at in terms of buying it here. But you know, that's a pretty sharp uptrend. Doing pretty well, but it's still a pretty thin stock. But it's not bad. You know, I can't say it's bad. Can you talk about bank stocks such as GS? Well, they're bank stocks and they're all moving higher in their patterns. Do we want to own them? No. And Goldman Sachs, same thing. It's the same phenomenon. I know somebody who bought Bank of America at 5. They feel smart, and I suppose depending on how long this thing goes, you could get a lot smarter, I suppose. But I wouldn't really be buying these things here. Dr. K, any thoughts on the financials?
Yeah, well, XLF, the financial ETF, of course, has come to life, and with it, a number of these bank stocks like, Wells Fargo and Goldman Sachs, they're not, they're definitely not the best cargo out there. They tend to be pretty slow movers, and in this kind of market environment where we're in an uptrend, I'd be focused on the faster horses.
Yeah, I think though the movement in the financials in the XLF, as you see in this chart right here, I think that's positive for the market. So those look fine. Somebody says if you had just held Priceline for the last 6 years, you would have been up 200 points. But that's points, not percentages. So we operate on percentages. So I don't think my track record anywhere I list performance in terms of points. So percentage is what matters. So 200 points on Priceline is well, it's what 40% move. So like I said, same period of time, Vincent's doubles. So that's the difference. But yeah, you can own it. So we're not telling you that it's a bad thing. Any stock that's in an uptrend is a good thing to own, but you also have to realize that certain things have different risk in terms of volatility, and liquidity and whatnot. So somebody asked about fuel cell, Doggy, not a buyer. TSLA, it's Tesla. I don't like Tesla. Crummy car. Have you checked out the Tesla cars, Dr. K?
Oh, it's my friend's company. And he's the guy who started PayPal.
Right.
So I really respect him in terms of being able to come up with fascinating, cutting-edge ideas, and that makes me biased that this company will be successful. However, the pattern's going nowhere, so I'm certainly not going to be an investor in this company. But I do support it, and I do believe maybe someday it's going to become a lot bigger than we see it now.
I like this question. When your new book comes out, would you be amenable to giving BSI members a discount and shipping it out? Something, I have news for everybody, and that is when you write a book, and it is even a stellar or standout success as our book was, you don't make a lot of money. And I don't think I want to make even less money or to me it's almost nil, really. When you think about the money that we spend, flying the jet out to New York to do the publicity tour in New York and whatnot, I think I spend more on 2 jet trips than we make on the book. So, to me, I don't see why we would have any incentive to give a discount on the book. I think you can get it pretty cheaply from Amazon, and there will probably be electronic versions. So, and then
actually, they
also like 10,
Amazon.
Jesus.
Amazon generally, well, actually, a lot of these online book retailers always deep discount these books, and so Wiley, the retail might be 65, but then Amazon will be selling it for 35. That's pretty typical.
Lulu, let's look at Lulu. Continues to go higher, and you had a big reverse pocket pivot here. We put that out yesterday in an email report. IWN, resistance at 835. Well, the Russell's 2000 is not the leading index, the NASDAQ is. But that's fine. So just, spacing, no big deal. Don't try and make it into something more than it is. Right, Dr. K?
Keep it simple.
Did we talk about fire? Somebody asked about fire. Yeah, you're looking for a pocket pivot on this again. So. Somebody says they will pay full price for a book. Thank you. And just so you know, you're not supporting us. You're supporting Wiley because you really don't make a lot of money publishing books. We're still writing the book. Hopefully, have it done in the next 2 or 3 weeks, and then it won't be published until I think it's in their fall selection or their fall lineup, whatever they call it. Let's see here. Mako Surgical looks great. Acting well. Broke out. pocket pivot type move right here. Well, yeah, but no, not really. It's a breakout. It's just a breakout. Looks good. Looks okay. Cup with handle, looks okay. Not my favorite name.
Yeah, it's still negative earnings because of the industry group it's in.
Yeah. Okay, have we missed anything in terms of any questions anybody had? If you could repeat anything you got that we didn't cover, do that now, please, and we'll go ahead and get to it. But I think you know kind of where we stand, and we put out a note yesterday that about the webinar, and in the webinar invitation we did say that we think for the most part you just want to sit tight. The better acting stocks continue to act fine, even if they do pull back. They're just doing what they need to do as far as we're concerned. And you look at, while the markets come off, you see stocks like InventSense hang tight. You see stocks like LinkedIn gap up to new highs, or higher highs rather. And so, to me, it's pretty obvious, and Dr. K as well, that's pretty obvious that you've got some rotation going on here. And it's actually fairly typical. If you see the market go up one leg, then you can have a period where the index is consolidated, but some leading stocks continue to move higher, as we're seeing. And there's some rotation as they hit some of the big index stocks. And as Bill used to tell me, that institutions a lot of times like to have cover for whatever they're doing. So they like to see the Dow, maybe manufacture a rise in the Dow while they're selling everything else. And the way I look at it, they've been selling off some of the cyclicals and going more towards growth and the financials as well. And you see retail stocks acting well. So you do see some rotation out of these cyclical names, but a lot of them are coming up, off of these big moves. So I wouldn't necessarily say the cat's top, but I think it's going to go sideways and take a break. That sort of hits the indexes, makes the Dow and the S&P look relatively weaker. This is the S&P here. But the S&P, what is it doing? It broke out here and it's just pulling back. There's really no huge volume in here. You had an increase in volume yesterday, but you're not seeing really above average volume, because you can see the volume line here is still well above the volume bars. It's really the NASDAQ, same situation on the pullback. You're not seeing any big volume spikes. So the pullback basically down to the 10-day moving average, not that that's very relevant for the indexes, but it just tells you there's not really much of a pullback here, and perhaps this is what the market needs in order to go higher. So I think it looks fine. So do you use the VIX to tell you trends? No, we use the indexes to tell us trends. How about you, Dr. K? What do you use to tell you trends?
Price volume action of the majors and leading stocks.
Yeah. Could you please list some savvy fund managers whom you respect? Well, let's see. Besides us, I mean, guys that I know from the institutional side of the business that I respected, Will Danoff over at Fidelity. Oh God, now I'm going to try and remember all these guys. Ron Strong from Strong Funds. Not Ron Strong. Ron Ogner from Strong Funds. Dick Strong was the owner of Strong Funds. Those guys were really good. There's the Calamos group. John Calamos, very sharp guy. There's a lot of what you want to do is but see, I'm just pulling things out from what I remember back when I was dealing with these institutional investors, mutual fund managers, and such, back at O'Neill when I was head of the institutional services group. These days, there are new people out there, and I would look at what are the A-rated funds, the A+ rated funds out there. Who are the managers? Look at their portfolios if you can pull up their holdings. Look at what their positions are. A lot of times I like to look at what some of these guys are doing. Like Jeff Vinnick is another guy who's very sharp, and he's been buying into LinkedIn, coming up to that 70, 80 area. And what you do is you go, if you can pull up their holdings in their funds, whether it's a hedge fund or a mutual fund, depending on whether or not they report it. I know for mutual fund they do, and so you can see if they've just started to take a new position. Dr. K, can you get that?
I think it's my interview. I'm going to take this. I'm going to take it into the room.
Okay, you got an interview. All right, so I'll wrap this up here in a bit here, but you want to see if they're starting to take a new position in a stock that has great fundamentals and they got a 1% position or 2% position. Some of these guys will go up to 5 or 10. So you want to kind of watch that, and I think that's a key thing to look at. So some of the smarter managers look at what their holdings are, look at whether they started a position, because a lot of times that means they'll be in there adding on the way up. And you can also look at positions that they started that maybe they started out at 1 or 2%. Now those are constituting 10% of their portfolio. Maybe it's time to sell. So that's a possibility. So those are things to do. But yeah, I'd say that if you want to find out who the very best managers are out there in the professional money management world and mutual funds, go find the AA plus rated funds in IBD, and then go do some research on those funds and their managers and what they own. Any concern about China's slowdown on the news? Again, there's that term concern. I'm not concerned because it's China and all my stocks are going higher today, so nothing really to be concerned there. I am concerned, though, that InventSense may go through 22. So that's going to cause a lot of concern for me. Yeah, right. Anyways, I don't see the China news as being all that big of a deal, because if the Chinese economy weakens, then you'll probably see the Chinese government come in and ease, and so I think that's the problem. And I think that's pretty much it. One last comment. I think this is interesting. This is from John. He says, I thought the hottest funds over the last 3 years typically underperform the lagging funds over the next 3 years. I don't know about that. I haven't done any studies. But I can tell you that sometimes a hot fund manager 1 year will become very cold the next year. And I know even a guy like Jeff Minnick, who's very sharp, he was running the Magellan Fund. He was very successful up until 1994, when he suddenly decided to go long heavy in bonds just before the bond market crashed in February of 1994. And you can go look at a chart of bonds from February 1994 and you can see that. The bond market crashed pretty well, and that's when he actually ended up leaving Magellan Fund, leaving Fidelity, and going off to start his own fund. He's been very successful then, but he's mostly running his own money now, which is probably a lot more profitable, something I found to be the case as well. So I think that that's probably true, especially when you figure that a lot of fund managers are really closet indexers, so they have a big year 1 year, and then they revert to the mean. I know, I'm trying to think of the guy, Ken Hebner. Ken, very volatile. You know, he'll be up huge 1 year, and the next year he'll get clobbered 30, 40, 50, sometimes 60%. So a lot of it depends on what they do, because they're not that nimble. They can't move very quickly. So they can do very well in 1 year when the market's rushing to the upside, but when things start to sell out, they're very slow to be able to get out, and they can get clobbered. So, but I would say, again, just go to IBD and look at the A-plus managers. InventSense did go through 2208 so far, so it did. Oh, I'm very concerned about that. But it's looking good. So it looks like you're going to get the pocket pivot today, so we're going to keep an eye on that. We'll let you know if we see that happen later on today. Let's pull this up. Where's the volume up?
Yeah, I would say the odds are overwhelmingly positive that we'll get pocket pivot volume.
Yeah, I don't know what the e-signal's freezing up over here. I don't know what the deal is. Zynga got here late. You're going to have to wait for the video. Zynga's just doing a secondary, so it needs to continue basing. All right, Shane, just for you, we'll look at Zynga and we'll close this out. You know, as I said, you're coming down into this level of support. The 10-week moving average here on the weekly chart is catching up to the stock. They probably need to complete this 42.9 million share secondary offering and then see what the stock does after that. Right now, we don't have a position. We tried buying this, but it's gone as of today. I'd rather be in the hot movers. I'd rather be in InventSense. Anyways, on that note, everybody, that's all we have to say. Dr. K, anything to add?
All good.
All right, everybody, thanks for showing up. We'll catch you next time. Good luck, and hang in there. Do not let the market shake you out of your positions. Do not be hypnotized into selling at the lows of the day. All right, take care.
Rule. So long, everybody.